There you go. There are some of the world's most famous economists with their take on the trade war that we are seeing between the two largest economies and what the impact is likely to be on a country like India. You're already seeing FIIs exit and press the sell button on emerging markets. Almost $5.5 billion has flown out of the emerging markets in the last week to 10 days. Let's head back home now. If there is one sector very much in focus today and hitting a bumpy ride or a patchy air patch, it's the aviation sector. Domestic air passenger growth has fallen to its lowest level this year. In fact, it's not just at the lowest level this year, it's at the lowest level in the last 5 years. That's the slowest growth you've seen in the month of May in the last 5 years at about 16.5%. You can blame high crude oil prices, you can blame higher ticket fares, but May is also seasonally a very busy season to travel. It's the holiday season, so certainly not auguring well for aviation stocks, whether it's an Indigo or a SpiceJet or a Jet Airways. But the one stock that has taken it the worst is Interglobe, that owns Indigo, and that's after influential brokerage firm Citi came out with a report downgrading its estimates as far as Indigo goes. So we've got our in-house expert Pranay Jain, who will be getting you more details on the Citi report and the data that has been coming out for the aviation sector for the month of May, which has not gone down well with the Lal Street. And also, as you can see on your screens, Mayur Milak, the research analyst at Indianivesh Securities, who will be discussing the aviation sector for us. Let me come to you first, Pranay, before we go to our guest. The data is certainly not encouraging, and like I said, May is supposed to be a seasonally busy one for the aviation companies.
Well, yes, 16.5% domestic passenger traffic growth is lower than the 20% run rate that we've been used to for a long while. So as you pointed out, yes, when it comes to a monthly basis, that growth rate is the lowest that we've seen in the last 5 years. But it's too early to say or suggest whether it is a slowdown in discretionary or consumption demand. I agree with you that because of higher oil prices this year and the elevated ATF costs, the margins of these airlines are going to be under pressure. There is some leeway that they have when it comes to yields. So while they may have improved on a year-on-year basis, it's not enough to offset the pressure which is going to come from the elevated fuel costs. And this has been the trend for a while. It's not something which has happened yesterday or overnight. This pressure has been there for quite some time, but add to that the weakness in the rupee, having gone past 68 mark right now, there is more concern that not just oil but other expenses such as the salary of expat pilots and the maintenance contracts and many other dollar denominated expenses will also see quite a bit of increase, which is why the margins are going to be lower and also the profitability. If you actually look at the chart of all these airlines, they have been underperforming for the last couple of months. Look at Indigo, for example. It saw a 52-week high of close to 1500 and it's seen a 25% erosion from those levels. It's gone below the 200-day moving average today. Citi has also, while reiterating its sell call, slashed the target price to 1070, which means it sees another 10% decline from the current level for the reasons that I mentioned. So yes, higher oil costs, weakening rupee in an environment where you don't see so much increase in tariffs as you would see in Q3 of the year, because that is seasonally the strongest. This is a good season but not really a great one, and also since industry capacity is already seeing addition, you are going to see pressure in some factors. But let me tell you two things where we haven't seen any disappointing show. One is that it's maintained its market share at 40.9% for May, which is healthy. It's actually the sum of nearly 4 domestic airlines when it comes to market share. And secondly, its load factor has been 91%. So that has also been good. Yes, the growth rate has come down from previous levels, but too early to suggest if it is a slowness in the discretionary consumption trend.
The stock is down by 5%. That's Interglobe Aviation. So this Citi note has certainly chopped off its wings in trade today. Pranay, thanks for that. But let's discuss this. Let's discuss, of course, the latest May data, which seems to be disappointing the street as well, with Mayur Milak, research analyst with Indianivesh Securities. Mayur, hi, good afternoon. Thanks for joining in. You just heard out the detailed note, the detailed analysis on Interglobe Aviation. And given the fact that, crude oil prices will now be at an elevated level on an average of about $75 per barrel. There's increase in ATF prices as well this quarter that are expected to weigh down on operating performance, the bottom line of airlines as well. Is this as well something you're penciling in, pressure on profitability going forward?
Yes, I think so. I'll have a different view, at least as far as the monthly numbers go. So, while, you all are gushing the fact that the industry growth has been the slowest in 5 years at about 16%, you also need to check the base. So last year, same time, while March and April numbers were at about 9 million, the May last year had done 10.1 million as far as the total passenger sales growth. And on that base, we've done a 16% growth. If you look at the total absolute number, we are at 11.8 million, which is by far the highest. So I definitely think that the growth trajectory continues to be strong. I don't believe that looking at 16% is the right way of looking at the industry growth, because you are ignoring the base part of it. So I think that number is good. So I don't see demand really a concern. So the story that because prices have gone up and demand would have come down a bit, I don't think I agree to that side of the story. I think demand is very strong. We are in a structurally strong demand zone. Coming to the profit side of the story, yes, I think quarterly, if we really see compared to Q4, your crude prices have gone up by 27%. Against that, these guys have taken a hike of about, so you have a better yield, and they've introduced a aviation fuel surcharge, which covers at about 8% on the top line. So I think they've covered about 22% of the fuel cost hike. But yes, it will still continue to add pressure on the margins. I think, as rightly said, rupee depreciation is way more concerning than the crude price at this point. So I think as the analysts keep factoring in, the increase in fuel cost and the rupee depreciation, you will see, the industry consensus really coming down as far as the profitability goes.
Hi, Mayur, this is Nenta that's joining in from the New Delhi studio, rather the newsroom. You've spoken about how you should put the base effect in play and therefore the growth data is not so bad. But what I found to be very interesting was that it was not your regular airlines or the bigger ones that garnered the maximum share or, it was actually Go Air, Air Asia and Vistara that led the passenger traffic growth in May. How would you look at that data? The fact that these three airlines seem to have done better than those that you regularly see on top of the pecking order, whether it's an Indigo or a SpiceJet or a Jet. Should we read too much into that? Is this just one aberration in May?
Yeah, so I think looking at the whole data, you will see that while Indigo has gained market share, I think Jet and SpiceJet both have lost market share. For SpiceJet, I think the reason is pretty clear. They are running a 95% load factor capacity utilization. And that is why any further increase in demand, they are bound to lose market share because of lack of supply. I think that is a temporary issue, which I'm sure by next month they will start getting their newer aircrafts, and that should be resolved. Jet, I think, is structurally losing some market share. There is a cause of concern, which I think is reflecting in the stock price as well. Indigo has gained, and yes, I think the likes of Go Air, Air Asia, Vistara all have gained significantly. But again, I would look at the base effect. Last year, same time, they did not have a very significant market share. Even at this point, their market share is not...
there. So, Mayur, let me interrupt you there. So with what all you're pointing out and the trend that you're seeing, and keeping in mind that the aircraft delivery has to take place, and also, those emergency landings and the troubles that Indigo's been having with its new engines, you've seen only one influential brokerage firm, Citi, come out with its view as far as Indigo goes. But from what you're saying, isn't there then also a case that maybe the markets need to re-rate a SpiceJet and a Jet?
Yeah, so I think we've had a reduce on Indigo from 1500 odd levels. Our target price was 1070, remains at 1070. I think we primarily factored the rupee depreciation and the change in strategy at Indigo, which was a part of concern at those levels. So I think we continue to maintain our reduced stand on Indigo. As far as the re-rating on the other stocks go, I think yes. My theory is very clear as far as the demand goes. Demand is strong, and yes, crude will always play its role and impact on these airlines.